Assalamualaikum warahmatullahi wabarakatuh. My name is Karimi. I'm from Group 8, Section 1. So for this project, we selected four prominent blue chip stocks listed on Bursa Malaysia: Public Bank, Petronas Chemicals, Tenaga Nasional Berhad, and Gamuda. Our observation period covers 3rd March to 30 May 2025. Why and how do we build this portfolio? We followed a structured stock selection process grounded in fundamental analysis, sector diversification, and long-term investing principles. We began by narrowing down our choices to blue chip stocks on Bursa Malaysia, companies with strong reputations, large market capitalizations, and proven financial performance. This filtering gave us a pool of stable and familiar companies with strong governance and high investor confidence. Then we ensured proper sector diversification. Our selected stocks represent four different industries: Public Bank from the financial sector, Petronas Chemicals from the energy and petrochemical sector, Tenaga Nasional Berhad from the utility sectors, and Gamuda from the infrastructure and construction sector. This diversification helps us manage risk and reduce our portfolios dependent on the performance of any single industry. We apply key fundamental indicators such as consistent revenue and net profit growth, strong dividend track record, low debt to equity ratios, and stable or rising return on equity. Each company also had a positive macro or sector outlook at the time of selection. Public Bank benefited from the rising interest rate and better margins. Petronas Chemicals showed strength in global petrochemical demand. Tenaga offered defensive value with stable dividends and ESG potential. Meanwhile, Gamuda stood out for its strong project pipeline both locally and overseas. Starting with Public Bank, the stock price declined from 4.56 to 4.31 ringgit. This gives us a negative HPR of 5.03%. While performance was below expectations, Public Bank remains fundamentally strong with right ROE and low risk profile. Next is Petronas Chemical, whose share price moved from 17.46 to 17.96. The calculated HPR is 3.47%. The company enjoys strong operating cash flow, stable profitability, and consistent dividend payouts between 4 and 5%. With global demand remaining strong, Petronas Chemicals brings valuable exposure to energy and industrial sector. The Nasional Berhad is the largest utility provider in Malaysia, saw its price rise from 13.7 to 14 ringgit. As a near monopoly in electricity supply, TNB provides reliable earnings and solid HPR of around 2.59%. It brings defensive value of long-term stability to our portfolio. And finally, Gamuda increased from 4.21 to 4.57 ringgit, generating the highest SPR in our portfolio at 10.76%. The company demonstrates strong free cash flow, a low debt to equity ratio, and a steadily improving ROE around 10%. Gamuda involvement in large-scale projects both locally and abroad strengthens its growth outlook. So we visualize our portfolio using a line graph for price movement, a bar chart for return comparison, and pie chart showing equal allocation of 24% per stock. This equal weighting further reinforces diversification and simplifies risk control. By spreading investment across utilities, finance, energy, and infrastructure, we reduce overexposure to any one sector. These industries also reflect the core of Malaysia's economy, offering stability amid market fluctuation. To conclude, our portfolio reflects a low-risk, long-term strategy. The stock selection followed a rational multi-layered process starting from Bursa Malaysia filtering, sector diversification, fundamental strength to economic outlook, and historical performance. While stock prices may move in the short term, these companies have strong fundamentals, brand reputation, and in some cases, government-linked backing. Our portfolio is built for capital preservation with consistent returns, not speculative gains. Thank you for watching our presentation. Assalamualaikum warahmatullahi wabarakatuh.